Welcome, everybody, once again to this week, and what a week it has been. All right, it's good to be back. I know we missed last week due to a big storm in Ottawa that it took out a little bit of everything, including my power and internet. Hence, I was not able to break the news last week. But no frets, everything is now back to normal for most people. I think about 94% of people have all of their power back, which is fantastic. So everything is back to normal. We got some great topics for us today. Today we're going to talk a little bit about the S&P rebound. Is this the best week since 2020? What does it mean? We're going to talk a little bit about that. We're going to talk about the Canadian banks. Apparently they're making bank, but are all of them making bank? There's also a rumor floating around. Apparently, EA may be for sale. So we're going to talk a little bit about EA and maybe who potentially might want to buy EA. The other topics we have are with electronic vehicle metals. That has been an industry that has been booming. People have been making a lot of money off of EA metals. Have we peaked? Is the EA metal bull market over? Are we looking at a correction? Well, Goldman Sachs seems to think we are. So we're going to talk a little bit about that. And we're also going to talk about the UK windfall tax. What the heck is the UK windfall tax? And is this something that's going to affect the rest of us? So we got those of our main 5 topics. We got a couple of little extra topics in there as well that we'll get to. And as usual, we'll find out what in the world is going on with Elon. This has actually been a pretty quiet week for Elon, so we don't have to worry too much about him. Before we jump into our first topic, though, let's very quickly, we'll greet everybody in the chat. I guess we'll greet the one person who's currently showing up in chat. And welcome, Jill. Good to have you here. Okay, let's jump right into the topic. So the S&P 500 had a massive rebound last week. We're looking at the best week since 2020. So, and this is not just the S&P, also the Dow Jones and the NASDAQ also had really good weeks. So the way it sort of worked out is both the Dow Jones and the S&P 500, they had their best weeks since basically November of 2020. So this is their best weeks of the year, which is fantastic because right now it's been horrible. The S&P 500 has actually been on a 7-week losing streak, and that has now come to an end as they did rise this week 6.5%. Now the Dow Jones, they rose 6.2%. And that actually snapped a bigger losing streak. They had an 8-week losing streak going. And I have to say, the last time the Dow Jones had an 8-week losing streak was all the way back in 1923. So just putting that into perspective for you. Now the NASDAQ, they were up 6.8%, which is fantastic for tech. They ended as well a 7-week losing streak, which is absolutely fantastic. So I thought that was really great. So some of the big gains, a lot of the big gains in the week came towards the end. So between Thursday and Friday. Now, one of the big reasons for this was we did have a report that came out. It was called the Core Personal Consumption Expenditure Price Index. And that there rose 4.9% in April. Now, yeah, it's still, prices are still rising, but here's the part that people were stoked about. In March, that same index ran 5.2%. So it actually did, even though it's still on the rise, it's slowing down. And people are looking at that as being really, really good. And that is good. Hopefully that means that we're going to get a little bit more confidence back into the market. One of the best things, though, is with tech, we did have some really good signs. So, for example, Dell, their stock price jumped up 12.8% at the end of the week, and that was based on their earnings. A chip maker by the name of Marvell, they also went up 6.7%. Zscaler, they're an IT security company. They were up 12.6%. So it is good to see a little bit of the bleeding stopping in tech. And here's what this big thing is: this a relief bounce or is the bottom in? And now Michael H just asked me if the sales are over. Well, if it's a relief bounce, then no, the sales are not over. If the bottom is in, then yes, your sales are probably going to start petering out. But the best way, of course, to invest is by dollar cost averaging. So if you're looking to invest, just start DCAing now, because it's really hard to time the market. So when you're looking for the bottom, you usually don't know it's the bottom until you're already on the way back up. That's just the way, the nature of the market. Now, if you happen to have that foresight and you can call every single bottom, you really need to have a YouTube channel and start doing it on YouTube, and that will be fantastic. But here's one of the things that you do need to keep in mind. When it comes to the market right now, we're still in sale territory. A lot of things right now are greatly discounted. So if you were to look right now, if you were to look at the NASDAQ is still technically in a bear market because they are still down 25.2% off of their all-time high. So that's massive. So right now, tech companies are still at a great discount. The S&P is down 13.7% off its all-time high. So they're not technically in a bear market. And the Dow Jones is down 10.1%. So keep in mind, we're talking about American stocks, but a lot of times the Canadian market pretty much follows right in step with America. So these are some big numbers. The big thing, I think, is to watch what the NASDAQ does. If the NASDAQ keeps climbing, and if they manage to break above the 20% being down, then at that point, I'm going to seriously start thinking we might have had a bottom in. But it's really hard to tell. There's a lot of bad stuff still going on in the economy, and those are definitely going to be things that we're going to be sort of dealing with over, I would like to say, just the next couple of months, but honestly, it's probably going to be longer. Probably going to be dealing with this stuff for probably the next year to 2 years, a lot of it. There's some things that are broken right now in the system out there that it's not an easy fix. But let me ask you guys this question: are you guys already DCAing, or are you waiting for the bottom? That's a good question. So it'd be interesting to see what you guys are doing, because I'll tell you right now, I really, really, really believe in the DCAing. And if you DCA and the bottom and it goes a little bit lower, you're still in better shape than that person who tried to time the bottom and missed it. So that to me is huge when it comes to the market in general. So that's kind of good. Okay, so our next topic of the day is the Canadian banks. So all of the banks came out this week with their Q2 earnings reports, and for the most part, they were pretty good. They were good enough that 5 out of 6 banks have hiked their dividends. Now, Michael's saying he's doing some of both. It just depends on if I have some money to spend. Absolutely. And that's kind of one of the things. And well, I mean, one of the whole ideas too with this community is that, we tend to nickel and dime into things. So a lot of times it's like, even if you're buying, $10 here, $10 there, that fits in very well with DCAing. It's like, if you got a spare, even if you've only got a spare $20 every week that you can throw onto something, it still doesn't hurt. It all adds up. And that's kind of the beautiful thing about investing. And then once you start taking your returns and your dividends into account, we create that whole snowballing phenomenon where it starts as a tiny ball up at the top of the mountain. And as it slowly moves down, it keeps getting bigger and bigger and bigger. By the time it hits the bottom, you've certainly made an impact. So that's kind of cool. But right, so with the Canadian banks, as I mentioned, 5 out of 6 of them have actually raised their dividends. The one that didn't raise their dividend was TD Bank, which is interesting. Now, TD also beat their estimates. Everybody except for CBIC beat their estimates on their Q2. So TD, BMO, Bank of Nova Scotia, RBC, and National Bank all beat their estimates. Now with CBIC, they kind of just missed out on their estimates. So hey, Bleak, good to see you. So it's kind of close on their case. Now, when it comes to their dividend hikes, the hikes sort of went as follows. So Bank of Montreal, they did a 4.5 cent raise. So their dividend went from $1.34.5 to $1.39, which is not too shabby. Scotiabank, they did a 3 cent raise. Their dividend going from $1 to $1.03. CBIC did a 2.5 cent raise. So their dividend went from 80.5 cents to 83 cents per share. RBC did a full 8 cents. Now they did the biggest raise, and they went from $1.20 to $1.28. And National Bank did a 5 cent raise, so they went from 87 cents to 92 cents. So that's all pretty cool. Now, one of the things too interesting about the banks is they're playing it a little bit on the conservative side. So I think the banks are a little bit they're kind of a little bit iffy on a few things, especially when it comes to debt. So they're being a little conservative, and I can understand why. But keep in mind that with the rate hikes that are coming, these guys are all primed to make some money. And as investors, I mean, I don't like putting my money in these banks because they service fees and the lack of interest. But I have no problem buying their shares and making my quarterly dividends off of them, as well as just the general growth, because a lot of these shares have gone up big time. And welcome to the friggin' Oracle. He has made it. That is kind of cool. Excuse me. So that's kind of the interesting thing. What banks do you guys own? Or well, I mean, technically, yeah, if you're an investor, you're an owner, you're a part owner. So I've got some TD and I got some Scotiabank. So that's it. Now, Ken is basically doing his DeFi staking, and that is all. Fantastic, Ken. Fantastic. Hopefully that works out for you. But I mean, you still, even today, like, even when you think about unbanking, a lot of times it's really hard. Like, if I wanted to completely unbank, like right now, one of my favorite little banks is EQ Bank. So if I want to unbank completely, the problem is EQ Bank doesn't have a debit card. So that means I can't just use EQ alone. I have to use EQ with something like the Wealthsimple Cash or the ShakePay Cash card and sort of use that for purchases. And right now, the ShakePay Cash card is not the best, only because they don't have a physical card that you can use. And you can, if you've got it hooked up to your Apple Pay, you can use that. But when you run into those situations where they don't accept Apple Pay, you're kind of out of luck. So that's the one nice thing about having the Wealthsimple Cash card. So there are ways that you can certainly do it, and that's not too bad. But now Ken mentions that he has shares in a credit union, but apparently they gave him the shares. Okay, that's cool. I would be tempted to. Well, here's the thing. If that was the reward for banking, like if a bank said, hey, if you keep this amount of a balance with us, we'll give you a little bit of our shares, I'd be like, okay, that's not a bad idea. So I would certainly be open to that. All right, and Michael says he has TD and Royal. I suppose I should pop these up here because it's kind of cool. So yeah, that's good. It's really interesting too. I think TD is one of the most popular ones. Whenever people are telling me what banks they have, I always hear TD. And they're the one that didn't raise their dividend. And oh, look at this. Look at this. This is fantastic. Redbeard has passed 420 days on ShakePay. That's like awesome. Like I'm up in the 70s something because I Tim Dantered it back in around the beginning of the year type thing. So it was just and then I did it once again after that. But no, that's fantastic. So he's getting a full 1,000 sats every day. And that's not too shabby and look at it this way right now, Bitcoin is, I think we're sitting just shy of 30,000 US per coin. When we get to another all-time high, if you think about it, every 1,000 sats that you're getting right now will be worth double that when we get to back up again. So that's kind of one of those things. Yes, dantering it. That's not. I I usually, well, I just call it. I always throw the Tim at the beginning because I think Nancy has no problems with it. It's just Tim has the more forgetful mind when it comes to shaking his shake pay, which is kind of cool. Yeah, so that's kind of the interesting thing about banks when it comes to them. Now, the next story I have up is this one's a little bit interesting. It's more of a rumor than a story, but there's been some reports circulating that EA is looking to be bought. So EA wants to sell themselves to somebody, and right now the front runner, according to the rumors, is Apple, which is kind of interesting. Apple, of course, will deny it. Now, here's the thing about Apple. Apple will deny pretty much everything up until the moment it becomes completely official. So that I don't put any credence on them denying it. But part of the whole idea is ever since Microsoft went after Activision Blizzard, EA's been sort of looking at that and sort of thinking, okay, how are we going to compete with Activision Blizzard now as they become part of Microsoft? And that's one of the reasons that they're looking to become part of another company. Now, the three companies that they've been talking the most about are, of course, Apple, Amazon, and Disney. So those are the three companies that have been in the rumor mill. But take this with a grain of salt because, quite honestly, it's hard to say whether this will actually happen. I think for Apple, picking up somebody like EA at this point in time, I actually think that would be a good move. And one of the reasons I think that it would be a good move is right now, Apple is not increasing their output of iPhones this year. And the reason they're not is because, well, there's a whole bunch of factors, everything from the supply chain shortages of chips, and with the effects on a lot of people, they're not expecting their sales to improve. They're expecting to be pretty much flat across the board through 2022. And they're actually kind of counting on it. So they're not going to have that surplus inventory, to make up for a lack of growth, which to me is, I think, a really good idea. It means that they can use their money to invest in other avenues. And I think EA would actually be a really good venture. I would actually love to see it. I would love to see Apple buy EA. When it comes to Disney, I think Disney's too big right now, and Disney's is kind of too big to fail as it is. So I think Disney's fine. I think Disney has enough on their plate that I don't think EA would be a good fit. Amazon, maybe another story. Amazon, I think, could certainly, but at the same time, I think anybody who's into a lot of these, a lot of the streaming market right now, they sort of need to stay focused on that to see what's going to happen. It'll be interesting. I'll be interesting to see the numbers on Netflix when it comes out after all of the whole Stranger Things, because that's hugely one of the most popular shows is Stranger Things, and that's going to really, it's going to pick them up a little bit. Will it be able to pick them up enough to make up for some of the falls? Absolutely not. But it'll be interesting to see how much it does pick them up. So that's kind of one of those neat little things. And yeah, exactly. That would be huge. Now, as somebody, I do hold some Apple shares. So Apple joining with EA, usually when you have a big merger, a lot of times the stock will sometimes go down a little bit. And some of the operating revenue, because there's a lot of things that happen on the back end when these type of mergers happen. So you can sometimes get a small little bump down, but then usually once things have settled out and all of these acquisitions have gone through, you're usually really stronger on the other side, especially if it's enhancing what a company has to offer. So yeah, that would be absolutely fantastic. All right. Now the next topic I have for today is kind of interesting. It's all about EV vehicles. So Goldman Sachs has come out and they are saying that three of the main metals for EV batteries, so we're talking nickel, cobalt, and lithium, are looking at some issues down the road, if not imminently. Now, one of the things that they're saying is that because of the popularity of these batteries and of that sector, a lot of investors piled into a lot of stocks involving these metals. Now, the end result of all these people piling into, lithium, nickel, and cobalt is that the companies had more resources and started producing more of the materials. So we're now getting to a point where, especially with lithium and cobalt, where we have a surplus starting to develop. So because of that, what Goldman Sachs is predicting is they're predicting a very steep correction on on cobalt and lithium. So this is kind of an interesting thing. If you hold a company like, let's say, Standard Lithium, for example, you want to pay attention to stuff like this, because if they're right, and we do have a big correction on lithium, you could see some pretty extensive price falling on those stocks. Now, the beautiful thing is that this is not a forever thing. This is basically to deal with the surplus. So we're looking at probably about a year of depression if it happens. Now for nickel, they're predicting nickel will go down too, but they also think that nickel still hasn't yet peaked before they go down. So they're thinking that nickel's still going to go up about another 20% before it falls into its correction. So that's kind of an interesting thing. What do you guys think about these EV batteries, these metals? Do you guys invest in any of them? Are you guys still into Standard Lithium? I know a lot of people were in the community for a while. So it would be interesting. And now Jill was mentioning, so wait for Apple to see if they buy EA and buy the dip. Yeah, that's true. Except for the fact that right now, most tech is already in a dip. So if you're DCAing into tech at the moment, you're probably in good shape. But it's one of these things that's like kind of going back to Michael H. and his question about is the bottom in? That'll be one of those interesting things. Now, here's one of the things too, when it comes to a rumor. So when we have that rumor about Apple buying EA, if you sort of decide, okay, well, I know Apple's in a good buying position right now, but if that actually happens and they go down a little bit, that would be when I want to buy. Well, if that rumor never happens, and you could totally miss the current buying opportunities that are available. So you got to kind of weigh things. And that's one of the reasons why I'm always preaching that dollar cost averaging is the best way to go, is simply for the reason that you don't need to worry about, am I missing a dip or should I wait for this? You're just not waiting, you're just buying. And when you do dollar cost average over a long period of time, you're buying the highs, you're buying the lows, you're buying the middle. But what tends to happen is you tend to be buying it at its value. You're not buying it when it's overvalued, and you're not buying it when it's undervalued. You are, but it averages out to the middle. So you're actually buying it at the value price long term. When you are one of these people who's trying to time the market, problem is that you often will miss that bottom as you're looking for the bottom, and you hit the bottom, you don't know that yet, and all of a sudden it starts flying back up, and by the time you realize that you're in the bottom and you try to buy back in, you're already above that fair market value in some cases, or you're really quickly approaching it. So when you miss some of these really good buying opportunities because you weren't DCAing, your overall average can end up being higher than the fair value that you would get when you're DCAing. That's kind of one of the reasons that, we will always say DCAing will beat timing in the market, every single time. It's just, it's one of those fantastic things. And as Michael says, time in the market is better than timing the market. Absolutely. And that is really, really a big thing. When you start looking at a long-term investing, and you start looking at, will this make me money over time? The answer is usually yes. But a lot of times, a lot of investors, they get very, I don't want to say day tradey like, but they get very much in that whole short term thing. And when you start behaving as a short term investor, that's when you make mistakes. So if you look at, even if you go back to the Great Depression, if you entered the Great Depression and you had held on to your good conviction stocks through the Great Depression to the other side, you would have made money, but people didn't. People panicked like crazy. You take Warren Buffett, take our good old friend Warren Buffett. As people right now have been panicking this year, and they've all been talking about, oh my God, we're going to fall. The bottom isn't here yet. Holy banana bread. And what's he been doing? He's been buying stuff. He's been going out buying stuff, like he's bought Apple, he's bought Chevron, Citibank. He is just buying. And what he's buying is he's buying high conviction stocks at some really good prices, compared to what he evaluates them at. And that's the way he's been approaching things. So it's kind of one of those things. It's human nature. When things are falling and you're looking at your portfolio and you're looking at the number getting smaller, it will scare the banana bread completely out of you. You'll be like, holy crap. You want to get out. You want that safety. The only problem is, if you do, you're going to take those unrealized losses and you're going to turn them right back into real losses. And that's going to cost you money. And that's going to hurt you. And then you're going to be walking away from that thinking, oh my God, the stock market is pretty much sucks. And, these dips, these bear markets, these corrections, they really, really, really hurt. But now let's take the other perspective. Once you've learned to not give into the whole FUD, so fear, uncertainty, and doubt, once you approach it like somebody like a Warren Buffett mindset, you see that market falling and you're thinking, okay, now I can make some money. And that's when you start moving in and you start buying those stocks. You start DCAing even, you DCA into the companies that you have good, firm convictions in, companies that are not going to just disappear overnight. For example, Apple, because we've talked about them. We know Apple's not going anywhere. Apple's going to be there. At the other end of this, Apple's going to be making record profits again. That's the way it works. So there's nothing wrong with DCAing into Apple. And right now is a good time to be doing that. And now Michael is mentioning here, and that's why you need some dividends. Yeah, dividends are nice. One danger with dividends, and I always like to bring this up, is that sometimes you really want to pay attention because some companies will give you a crazy amount of dividends. So if a company decides to give you 15% dividends, but you want to make sure that, one, they can sustain that. And two, what are they sacrificing to give you 15% dividends? Is it a situation where you're not going to get any growth from it? In that case, you're just getting those straight dividends. And maybe that's okay, because maybe that's what you want. And the reality is too, as you get older, so if you take somebody who's moving closer and closer to retirement, they definitely want more dividends because they're looking to create that extra income that they're going to have that's going to sort of make their lives much more comfortable in retirement. Now, if you're not at that point, you don't want to ignore growth. And sometimes, and this is kind of funny, sometimes people will be like, I'm a growth investor. Another person is like, I'm a dividend investor. Well, the best investors are sort of a combination of both. What you really want to be looking at is you want to be looking at your total return more than anything else. So that total return includes the regular return on investment by the growth of the stock, in addition to whatever the percentage of their yearly dividend is. When you put those two together, so when you add your ROI on the growth of the stock and you add your dividend, so you take, for example, go back to that 15%. So you've got that company who's giving you a 15% dividend, but their stock is absolutely flat. So in that case there, your ROI is 0 on the stock, but you've got a 15% dividend. So you have a total return of 15%. Great, wonderful. Now, if you find a company and you're looking at them and you're going, oh, they've only got a 5% dividend. Well, if their stock, if their return on investment on the stock is flying up and you're getting a 20% return on that, and then they've also got a 5% dividend, well, you've got 20% ROI plus 5% dividend. So you got 25%. And, that person over there who's laughing at you for buying a 5%, who's getting a 5% div stock, well, you're making 10% more than they are. So that's one of those things that you have to always sort of keep. And it's very easy to get hypnotized by dividends because dividends are awesome. I love them. I mean, absolutely love them. But one of the things I try to do is I try to balance them out with something that's also growing. So right now, for example, anything in the oil and energy sector, we know that this is booming. This is a huge, massive sector right now. So when you take, and everybody know, I'm sure most people here probably know one of my favorite stocks is Canoe. One of the reasons I love Canoe is they've got a nice sized dividend. Now it used to be higher yield wise, but because their value of their stock keeps going up and up, the number keeps falling down. So now it's like in the 8% range. But I'm absolutely okay with that because this is a stock. Even when we were bleeding earlier in the year, everything would be red. I'd open up my portfolio. Everything was bleeding, except for, guess who? EIT. EIT was nice and green, sitting rosy in the profits. And the reason why is that EIT, they're an income fund, and they buy energy. All of their assets are energy or financial. And the only financial that they buy are the financials that support the energy sector. So they're very much keyed into that sector that's booming. So it's one of the reasons that one has been such a profitable stock over the last year and over this year. So they're a really, really good buy for that reason. So that's kind of that whole thing when it comes back just to dividends, is that you want to make sure you're looking at the big picture. Because when you're not looking at the big picture, you're not seeing exactly whether something really is a good buy or whether it's more window dressing than a good buy. And there are, trust me, when I go digging for stocks, and I do this I'm always digging for stocks because I got to keep making the videos. There's just so many really good opportunities that when you look at them from a total return opportunity, that you would have missed if you were only looking straight up at dividends. So keep both of those in mind. Dividends are great, but find the ones that have half decent dividends with half decent growth, and you're going to really, you're going to do well in the long term. So that's kind of one of the neat things about that. All right. I guess we were on a tangent. We were talking about the EV metals. So it's just one of those things. I know I have made a lot of money last year, especially on lithium. When lithium was really booming, there was this one point, I think in 2021, where lithium would go up and then it would crash, go up and it was crash. So I hate to say the timing, the market thing, but in this case here, I just had to, I was treating it more like a swing trade where I basically could see the pattern that it was making. So it was going up, down, up, down. And, I had a zone at the top where I was selling it, and I had a zone at the bottom where I was buying it, and I think I made it through about 3 pumps and, made a little bit of money doing that. So that's one of those neat little things to sort of keep in mind. But if this does fall, and this is one of these situations where right now, if you're heavily into, let's say, Standard Lithium, pay attention. If Goldman Sachs are right, and I always say the if because sometimes they're wrong, but I did read over what they were saying. What they were saying does make sense. Then you may want to be thinking about, is this something, do I want to perhaps, take some precautions against that? But here's the other thing. Keep in mind, if you're a long-term investor, and hopefully most of us are long-term investors, if it falls for a year but then it rebounds big time. And that's kind of what Goldman Sachs is predicting. 2024 would be huge and they'd be back up breaking records again. Then that's a year where it's on sale. I know that's kind of what Michael H was talking about at the beginning of the stream. Is it on sale? Well, that would be a year when it would be on sale. So that would be a good year to go in and, maybe keep adding to your position as it moves up. And that's kind of one of those things, but you have to have patience. And that's kind of when we talked a little bit about people who would be selling at the bottom. The last thing you want to do is you don't want to be selling at the bottom. If you're going to sell things, you want to be selling them at the top. Simple as that. And there's absolutely nothing wrong with taking profits when you're up there. It's the way the rich people stay rich. When you think about the whales, when you hear about Bitcoin at the top, some whales will sell, absolutely. Some of them don't. Some of them are holding on because they have a lot of faith in Bitcoin. But some of them will sell. And it's not that they're selling all, like their whole portfolio. They're probably just, selling some just to make some profits. And they put that money aside. And when the market eventually crashes, because it always crashes, it's a cycle. When it comes down and everybody's afraid and they're selling their Bitcoin again, these whales are, once again, they're gobbling it back up. And when they get back up at the top again, they'll sell a small portion. And as you can see, they keep doing this over and over again. And what they're doing is they're basically taking an initial investment that they have and they're making that investment bigger and bigger and bigger. And you know who's paying for it? Those people who are scared to death because the market's down, the people who are selling and taking the unrealized losses. Because what that is doing is you're basically just taking the money out of your pocket and you're sticking it into some rich person who's a whale. So you're sticking it into a whale's pocket. So it's kind of the way the stock market works. And I think if you can, and it's difficult because we're dealing with human psychology. And this all goes back to when we were cave people. When we were cave people, it was one of those situations where you would have fight or flight. It's a reaction that kept us alive as a species. You see a saber-toothed tiger, if you can't fight it, you want to run from it. Otherwise you're going to be lunch. Well, those reactions, we still have them. They're not as useful anymore, especially when it comes to investing, because when that market is in trouble, that bear market, well, you could almost see it as being that saber-toothed tiger market, and you're scared and you want to run and just drop your stocks. And that is where that's where it gets you. So it's kind of interesting. And here's Michael. They might drop, but governments are pushing people to EV. Governments are sort of working in that way, but you have to realize, Michael, that it doesn't matter how much the governments push. You have to make sure all of the supplies are necessary when it comes to supply chain. So if you have more chips than you have infrastructure, then you have components to put the chips into, those chips are just going to sit around and do nothing. You're going to have you're going to have too many chips for that simple reason. So it's nice that the governments are starting to, and it's nice that, for example, I know Trudeau, in that last budget, they earmarked some money towards our northern sector to get some of those minerals. And those are great. I mean, we may get that stuff out. And the beautiful thing is if we just start doing this and start putting that money into that now, by the time that money really starts making an impact, we'll be closer to when this little blip should disappear, hopefully. So it's going to be interesting to see. Max is still a cave person. I believe it. I absolutely believe it. See, I think Max goes home after this, and he's probably got his cave wall. He's going to draw some charts and figure out what he wants to do with his next investments. So that would be kind of funky. Now, Can a bus driver says 60 to 30, 50% drop, 30 to 60 require 100% to get back to even. Yeah, absolutely. Because you got to keep in mind too, a lot of this stuff is logarithmic. So it takes, it kind of works. It doesn't work in a linear fashion. It's not like a one-to-one type relationship. Sort of like, actually, a good example is an earthquake. So if you have like if you have a Richter 6 earthquake, Well, when you go to a Richter, 7 on the Richter scale, it's not, it's not, if you draw a straight line from 6 to 7, it's not there at all. It's more of a curved line because it's a logarithmic scale. So a 7 is much, much bigger than a 6, which is much, much bigger than a 5. It's because it's not a straight line. It's just that when you look at something on a logarithmic scale, it'll appear as a straight line, but it's really not. So it's just kind of one of those things to take into account. It kind of works this way as well. Remember to pump the Mountain Finance stock by liking and subscribing. Yeah, absolutely. Let's do that. If everybody wants to like and subscribe, that would be fantastic. I certainly like that idea. And I almost missed ACDAS62. Frontier Lithium has been growing really well over the last year. Yeah, absolutely. And here's the thing. If Goldman Sachs is wrong, and they have been wrong before, so take that with a grain of salt. I still think long-term lithium is a fantastic investment, and it really comes down to what you're doing. If you're a long-term investor, then definitely jump into it. It is really, really good. All right, and I'll get this other topic too that I wanted to bring up as well. This is kind of really interesting. So over in the UK, they have just, they're in the process of developing what's called a windfall tax. So what they want to do is they want to start taxing basically the energy sector companies, more specifically oil and gas, because of the record profits these companies are making. They want 25% of that. Now, what they plan to do with that 25% after they tax them is they want to create some one-off grants and different subsidies for energy costs that they can give to the poorest people who are out there who are really struggling. Sounds like an interesting idea. Now, the interesting thing, of course, the Conservative Party over in the UK is completely against it. And the reason that they're against it is that they think if you start taxing all these profits, it basically then starts hurting the investors. And if you're going to hurt the investors by doing this, they're not going to be investing in the oil and gas industry over there. So that's going to then hurt the oil and gas industry. So that's kind of the whole feedback loop they're saying. Now, when I read this, I was like, oh, I really hope that this idea doesn't make it over to this side of the pond, because I know myself, I'm well diversified into the oil and gas industry right now. And I wouldn't be surprised if a lot of you guys are also well diversified into oil and gas, because you guys are smart. You guys can see the profits that are happening. I would not want to see 25% of those profits going bye-bye. Even though, and you can sort of say, well, they're taxing the companies. But, you take 25% of the company's profits, and that will still filter down to your bottom line. So that's kind of one of those things that has me concerned about this whole UK windfall tax. Now, have you guys heard about this before? It was just I found it today when I was looking for some news articles for the week. So I thought that was interesting. Do you think that if the Trudeau government were to decide, oh, let's do this to help out the poor people, do you think that's something they could bring about, they could make happen? Because I find that I find that to be one of those things that I want to help the poor people. I want to help people who are struggling. I shouldn't use the word poor people, but I want to help the people who are struggling. I mean, we've been through a pandemic. It's not been fantastic. And now with inflation, yeah, I'd love to help those people. But at the same time, is this the way to do it? Or is there another way? That's what I would be more inclined to say. Like, there's a lot of money I'm sure we can get out there. Well, you look at, holy banana bread, you just look at how much the politicians are making. We could probably take a 10% cut off of all of their pays right off the top and start giving that back. And one of the other interesting things too is if you are a MP and you come in and you just do one tour of duty, so 4 years in the House, you've got a pension for life at that point. And if you do like 2 terms, then that pension gets bigger. So every time you do another 4 years, you keep on getting more. But that's money for life. And that's one of those things where it's like, should we be paying them as so much money for life? So it's just one of those things just to sort of think. And I'm kind of interested in what you guys think about that. And now while you guys are thinking about that, got a couple small little things here coming up. I read an interesting article about the job vacancies in Canada, and I think this is really, really fascinating. All right, so in March, Canada has hit a new milestone. As of March, we have 1 million job vacancies. So let that think in. That's a lot of empty jobs. So 1 million job vacancies. Now, they increased. Let me just pull this over here so I can see it. Got my data here. So the vacancies increased by more than 1/3 in accommodation, food services, and retail. There were also record vacancies in healthcare, social assistance, and construction. Like there's about 84,000 jobs in construction, and construction pays really well that nobody is there to do. Now, the job vacancies were up in all provinces. The largest increases were in Saskatchewan, Nova Scotia, and Newfoundland. But okay, now here's the kicker. When I mention these job vacancies, one of the first things that people will say is that, well, there's just people sitting at home not doing anything. That's all it is. Here's the thing. Here is the kicker to this. We have record low unemployment. Canada's unemployment rate right now is 5.3%. So 5.3%, it's low. So that's kind of interesting. We've created that whole, how are we going to get out of this mess? How do we fill all those jobs when most people are already working? So that's kind of an interesting thing. And when you start thinking about supply chain, and another area too that is really worrying is a lot of the summer employment. So, you're mostly tourism, mostly. They just are not going to have the jobs to fill it. There's going to be a lot of places that rely on their tourism dollar are going to have to rely on it a lot less this year. I mean, they've already gone through a couple of horrific years with the pandemic not having that money in there. So it is, it's sad to see this. And now Akadaz62 says Justin will just print more money. I really hope he doesn't, but nothing. I don't put anything past. It's just, I think we're in this situation now where we have to, whatever the pain is, we need to find other solutions than just printing more money, because all that does is makes things a little bit worse. Don't the MPs need 6 years to get a pension? I thought it was, and I should double check on this, but I thought it was 4 years to get one. 6 years, they might increase it, but we'll double check on that. Because that would be good if it were 6 years, which is fantastic. If somebody could just quickly Google that for us and bring it into the chat, that would be awesome. Because this is what I love about ACTAS. ACTAS is my personal fact checker. So if I make a mistake, I've got ACTAS to fall back on, which is awesome. All right. Now, yeah, so that's kind of interesting, I think, just with the whole issue with trying to get people, well, it's not even trying, Canada's population now, I don't even know how many people we have anymore. I thought it was, last time I heard it was something like 24 million, but I'm pretty sure we're up in the 30s somewhere, but you take it. Let's just see here. I'm going to grab the good old calculator. All right, if we've got, let's say we got 30, let's say we have 35 million people. I don't know if we do or not. I'm just pulling that number out of my butt. If we got 35 million, and right now our unemployment is at 5.3. All right, so that would take us down to 1.8 million. But keep in mind, once you remove people who are too young to work, so kids, you remove people who have retired, so the elderly, um, that number is coming down pretty quickly. So I'm almost at that point where it's like, do we even have 1 million people that we can just put into these jobs? That's a good question. That might be a situation where we may need to start looking at opening up immigration a bit more. I mean, at least I know we've got people coming in from the Ukraine, which is fantastic. I wish it was under better circumstances, but we need to get some of these jobs filled, especially when we get to a point that, because we just don't have enough people in jobs, that it's going to be impacting everybody when it comes to supply chain mostly, then to me, that's not a good thing. That's something we need to definitely get our minds around it, figure out some solutions, whether it be good old Elon and his robots. It's like, hurry up, Elon, get your robots in. Now, I guess we also have to look at Elon news. So believe it or not, this week has been pretty light on Elon news. There have been some, though. One of the things going on is apparently Twitter's looking to sue Elon. And they want to sue him for deflating their stock price. And they're saying that by him going on about the bots, that it's directly impacting their stock price. Now, I don't know if I believe that. I think the fact that everybody's stock price was falling in tech at that time, I don't think that they had that they can just sort of say, oh, it's all Elon's fault, because it really isn't. The other thing, too, is apparently during one of their shareholder meetings, the CEO of Twitter at the time basically said, no, I'm not answering any questions about Elon. So he banned all Elon talk during that meeting. I thought that was kind of rather interesting. The other little thing is Elon's been on a bit of a tirade on Twitter about billionaires being painted as the bad guy. He's been doing a whole bunch of polls on, who do you trust more, a billionaire or a politician? Things like that. I actually answered. I said I trusted a billionaire more than a politician, but, it's a close call sometimes. So that's kind of what's been going on in the world of Elon, is that, and I imagine this week coming up, it's hard to say, he'll only have 4 days to do it, because Memorial Day is the big holiday Monday. So, of course, the markets will be closed. Markets will be open, though, in Canada, which is fantastic. So just to give you guys an idea of what's coming up on the show this week, we'll answer Canna first. How many bots in all other sites? Maybe more pain in Meta. I think there's bots everywhere, to be honest. It's like, there's nothing, to me, it doesn't matter what social media platform I'm on. I've got bots or scammers or just, people coming in that, I don't want to call them undesirables, but they are. I don't want bots coming in, or I don't want scammers coming in trying to trick me into getting crypto or something else. Even YouTube, every so often I've got to go through and delete a string of comments, because when the bots come into YouTube, it's usually one person coming into my comments, and they'll be like, oh, this is fantastic. I love this video. And that John Riley made me a ton of money, and here's his Telegram number. And then 6 people all of a sudden will be like, oh my God, John Riley. I love John Riley. He's so awesome. And it goes all the way down. Of course, luckily I can just delete the top one and it deletes all of them. So I try to get those. If you ever see stuff like that in my comments, because now that I'm getting bigger, I'm starting to get more of that stuff happening. Just know that it's spam. And I haven't had this happen yet, but I'll give you guys a heads up. If you ever get a message from me trying to give you a Telegram number, it is a scammer. It's not me. I will never give you a Telegram number. That's just not the way I would do it. I would never do anything like that. And I always say, when it comes to the internet, err on caution. It's like, don't ever blindly accept anything that you run into, even if it's a situation where it makes sense. Because, like, for example, if you're waiting for a tax return and all of a sudden you get a message saying, oh, your tax return is ready, here's your link. Well, that's not how tax returns work, for one. But two, you might all of a sudden, where you're thinking about it, oh my God, where's my tax return? And then this email shows up, or text message, and you're like, oh, yeah, I've been waiting for that. It must be legit. Well, it's not, because what they do is in tax time, they mass send these out to as many numbers as they can get their hands on. A lot of times they'll have computers that they use that pretty much just take a number and they have it all set up, increasing the number by one as they go through lists and lists. And a computer can do this like insanely fast. So when you get these messages, anytime you get a message, if it's too good to be true, it probably isn't true. You always want to sort of get back. And apparently Max knows John Riley, so he is amazing. He's going to get back to him any day now. That's good to know, Max. That's good to know. Hopefully you and John Riley make tons of money together. That'll be kind of fun. Good old John Riley. So that's kind of what's going on there. Okay, so what I got coming up this week, as in not the show, but during the week, tomorrow I've actually got a video coming out on value stocks. So we're going to look at 7 stocks that have the potential to grow into something pretty interesting. So just check that out tomorrow. Of course, Wednesday night over on the Danter channel, Tim and Nancy Danter. I don't think they have an official real name yet, but they're calling it Danter Banter for now. I'm usually a guest there every Wednesday night. It's pretty fantastic. There's a bunch of us, like, we get together, we have some really good conversation. So you definitely want to check that out. If you guys have not heard about Tim and Nancy Danter, if you go down below in my comments, or actually not even in my comments, into my about information, so extra information, you go down in there. I've got friends of the channel. They're listed down in there. So just check them out, throw them up a subscribe. Listen to sort of Tim's dad jokes. He does usually a daily dad joke every day, which is pretty funny. Some of them are really, really good, and some of them, they're either really, really funny, or they bomb in such a way that they're really, really funny. So either way, you're going to have a good time. Coming up on Thursday, what do I have on Thursday? Oh, yes. Somebody had actually mentioned to me about Brookfield, some of the Brookfield stocks. So I may be doing that this Thursday. I have to double check on that. It's either this Thursday or the following Thursday. So that's going to be kind of cool. And of course, coming up next week, we'll do this week one more time. So we got a couple minutes left. If you guys got anything at all you want to throw in there, chit, chat, riff, talk about. I'll point out one little thing. A lot of people, if you happen to be a fan of Star Trek, there's a new series on. It's called Star Trek Strange New Worlds. And I started watching it. And a lot of the newer Star Trek, people have been complaining, because some people complain that it's too woke, or that, it's just not, it just doesn't capture the old Star Trek that people remember. I think you'd be pleasantly surprised if you watch Strange New Worlds. It's been really good right from the get-go. We're 4 episodes in, and the last episode, I won't spoil anything, but as somebody who watches Star Trek every so often, I would have to say it is the best episode I've seen in about 20 years. So take that as it will. Now, Max is asking about Canadian Western Bank. It just dropped 9% after their earnings report. Yeah, I've been looking at Canadian. It's actually really interesting. I looked briefly at Canadian Western Bank earlier today when I was looking for value stocks for my video. And they almost made it, because there are some good things about Canadian Western Bank. But yeah, I will look at that. I will put that on my list, Max, and see if we can get a video out on that within the coming weeks, because I think that's a really interesting bank. So yeah, I can do that. So you guys, that's how easy it is to get a video. Just stop in here and say, hey, can you do a video on this X, Y, or Z? And I'm there. I'm ready to do it. Actually, it's pretty cool because sometimes it's great if somebody throws an idea at me, then I'm like, oh, I don't have to come up with the idea. I can just get full on into research mode and get it done, which is absolutely fantastic. Yeah, before I go, now normally, normally this is about an hour, but I mentioned at the beginning as well about the storms last week, and I'll just tell you guys how it happened because this was really cool. So it was Saturday. On Saturday, I'm normally downstairs doing the research for Monday's video because I film it on Sunday. Well, I was down here in my studio doing the research. My studio is like in a basement. And I got the little alarm alert on my phone. I pick it up and it basically says, severe thunderstorm watch. And then it said, if you're outside, please find shelter immediately. I'm like, oh, I've never gotten like an Amber Alert style weather message before. So I go upstairs. I go upstairs and I take a look outside. Yeah, the sky's a little dark. I'm not thinking much of it. I went in the kitchen. I start to wash a couple dishes. But then it's really getting dark at that point. So I go back out to the front and I'm looking out the window and the rain starts. And all of a sudden, and this all happens like in a minute, like quite literally a minute. It was like it went from a little bit of rain to a wall of water just going right across. I could not see through the wall of water. And it was loud. It was as loud as like a train going by. And what's really interesting is that I know there was a lot of thunder and lightning happening, but I couldn't even hear the thunder over the sound of the wind. And after about roughly a minute to 2 minutes, it stopped, it died. And all of a sudden, I'm looking across the street. I can see a fence has been taken out. I can see another fence got knocked down. Then I'm looking over this way. I can see a whole bunch of trees down on the road. And of course, then the power went out too, all at the same time. So it was amazing. It was the amount of damage that this thing did was really interesting. Now, any of you who did watch, I did an emergency video, I think on yesterday. So there were two pictures in that video. One of a street with a bunch of trees down. That was my street. I took that picture. The other was a tree falling into a house. That was one of my neighbors. So it was really, really bad. So yeah, when the power went out on Saturday, had no idea when it was coming back. It did come back. I think it was pretty much, yeah, it was like, was it Monday morning or Sunday night? I can't remember now, but it came back I think it was Sunday night. I came back fairly late Sunday night. And then the internet came back Monday and then went out again on Tuesday. To the point that when I was on the Danter Banter on Wednesday, I had to actually use my phone's internet, but I got unlimited internet on that. So, but it's just not as good of a quality. So that was the whole storm. And that was what sort of put us behind. But that was one of the reasons I did an extra video on Saturdays. I wanted to make up for missing Mondays. But now everything is back to normal. We got all of our power, our internet. We're all full steam ahead, and that is fantastic. So we'll have these going weekly as usual. And somebody I think had asked me as well about guests, because I usually always have somebody on. I might bring somebody in soon, not for a full show, but more or less just a segment or something like that. Something I'm sort of throwing around in my head because I kind of really like this whole idea of doing this news type thing. And it really works well with a single person. But it's like, for example, if I was doing something on crypto, I could always just have a quick, I might even be pre-recorded or maybe just bring him in live if he wanted to, bring Ken in and he could just, be in there for 15, 20 minutes while we talked about a topic. So that's the way I'm kind of envisioning it. But yeah, so that's going to be all fantastic. Anyway, we've gone about 5 minutes over, and I don't mind doing that at all because, this is your guys' show, so you guys are the boss. I'm just sort of running it for you. Anyway, it's been fantastic. I'm glad to see you guys all here tonight. Next week, we'll do this all over again, and I think it'll be fantastic. So we'll see you guys around this week. Check out my video tomorrow, and I will talk